For China to successfully transition into a consumer-driven society in the future, the key is not simply to stimulate consumption by decree, but rather to improve per capita disposable income, enhance individual purchasing power, and recognize and legally protect the core and dominant roles of small, micro, and private enterprises in the employment market environment. These are the institutional improvements we need. This is what deep reform truly means. If you look at Japan over the past 30 years, you'll see what I mean. Since Abe, and even earlier with local governments, Japan has consistently advocated for structural reforms. However, on the path of structural reform, Japan has made efforts and investments in fiscal support for economic stability and expanding social spending. They held firm. We talk about the predicament of recession caused by negative asset values in the corporate and household sectors. I've read many articles, including Professor Su Xiaolin and Su Jing. Personally, I don't agree with them. Our situation is highly similar. Mr. Richard Ku's explanation is highly insightful and will remain relevant. Adding mathematical modeling would make it a top contender for the next Nobel Prize in economics. In my view, it's more significant than Bernanke's work on quantitative easing. It truly is the holy grail of macroeconomic research and excellently explains China's current situation. And in the future, we won't be able to escape its explanatory power and scope. Recently, since he also came to Hong Kong, many people have invited him to speak. However, I feel that very few people pay attention to the impact he mentioned that assets do not necessarily represent recession on the future development of China's economy. It's difficult to understand. China is similar to East Asian economies. Our natural endowments pose a greater challenge than Japan's. They have 300 million people, we have 1.4 billion. East Asian demographics and cultures are similar. Our gap is larger, and our challenges exceed theirs. During the recession, Japan still had 10 years of favorable demographics. Not to mention demographic dividend, but at least their population was growing slowly. For us, the decline of structural factors like land, population, labor, financial, and even environmental all hit us almost simultaneously. All these factors converged at the same point, arriving quickly. Breakdown in production factors, strong supply-demand contradictions in high per capita supply, and constraints on China's future economic growth and space, these issues are prominent. I agree with your point. In the future, competing over stock and seeking increments, we must turn to technology and productivity for new factors. No longer rely on massive factor input. The simple factor-driven, brute force model has reached a dead end. So where do our flexibility and resilience come from? There's no way forward relying on quantity. It has to be about quality. We must make up our minds and undergo painful, thorough self-reform. What does this really mean? It means deep, fundamental institutional reform. We've done this before 1980s. Economic growth in the 1990s, the WTO in 2000, and from 2000 to 2010. China had its golden era. Just like Japan. From the mid-1960s to the 1990s, Japan experienced tremendous growth. We also had our own core period, from 2000 to 2010. In this environment, it's important to understand both quality and resilience. The choice of industry. Since the environment changed, what does that mean? We are like Japan's East Asian economy. We must acknowledge this objective decline. In fact, we need a crisis or recession to clear out. Because right now, we have many zombie companies, and we also have incorrect economic development environments and approaches. The quality of our entrepreneurs isn't great, and the number of good companies isn't high. Even when it comes to developing our capital markets, take the registration-based IPO system, just look at the recent Zhejiang incident. I saw this project during my career. In 2018, they approached us, but we didn't dare to invest. It was a classic case of intra-industry competition, one fish, two words. But in the context of the Chinese market, projects like this attract investors. What are these people doing? This might offend some, but I think you don't even need to be a professional, have a bit of conscience, and some training in the capital markets, and you'd know that these projects should never be done. Problems are too obvious and blaring. Plus, giving resources to companies like this, which aren't even driven by technological innovation. Isn't this just like a manufacturing company? With such scarce issuance resources, yet the same set of assets gets listed twice to raise money twice. The media's skepticism is justified. But in China, things like this are everywhere. Nobody is even surprised anymore. No wonder ordinary people complain. How can the stock market possibly do well? How can value investing ever be realized? The Shanghai Stock Exchange approved it without issues. For good companies, rules and methods restrict them from selling shares, as they have large market caps. But when the same assets are listed twice, even through a shell company, regulations shouldn't be an excuse. Everything should be judged by conscience. These companies should not be given any opportunity at all. This is a moral destruction of the capital market and a systemic, forceful blow that cripples the very core of the market. What does this do to ordinary people? It becomes the biggest source of their loss of confidence and capability. How could the public possibly be interested then? So, in this environment, to be honest, we need to understand what will happen in the future. So for our family, we must stay close to ordinary people, focus on the most essential, high-quality businesses, and keep our heads down, working hard for even the most modest earnings. The future will be like what the famous Japanese writer described: a low-desire society. Young people are in short supply. This year, there are only 8 million, with a total fertility rate of just 0.8 something, not even reaching 0.9. We are only slightly higher than South Korea. If things keep developing like this for another 20 years, by 2035 we'll have 400 million elderly people. We have quantity but not quality, and factor supplies are still insufficient. The market will keep shrinking, labor will become more expensive and scarcer, changing our cost structure. Why is that? Because, as the saying goes, things are valuable when scarce. As labor gets scarcer, it becomes more expensive. Sometimes you see this in the US. I go there and am always surprised by how serious inflation is. When you pay, you realize back in the 90s or 2000, the tip wasn't added. Now, the bill starts at 20% tip, 22, 15, 17.5, you pick one. You don't have a choice. The rate at which people choose 20% tips is extremely high, isn't it? Very high. So what do we do? In the future, we're going to enter this environment faster. If you run a small restaurant and want to hire a server, offer 10,000 yuan, no one wants it. Believe that? If you go to a factory and want someone to operate a machine, manage data, or work in a machining center for 15,000 yuan, people still won't go. So let me ask you, how many restaurants in China can afford to pay a server a 10,000 yuan salary? How many factories can afford to pay an ordinary employee in a machining center 15,000 yuan? China's industries will face cost pressures, and the supply and demand balance will be disrupted. If we don't pursue industrial advancement, if we don't stimulate domestic demand, if we don't effectively generate profits and use the market to drive technological progress, using the power of technology to offset our rising costs, then improvements in labor productivity, potential growth rates, and production efficiency will all be affected. Our productivity is a fraction of Japan's and the United States. If we don't improve, we'll face supply-side challenges. In the short term, pressure to improve our cost structure immense. That's why we won't invest in labor-intensive industries relying on moderate labor input. Those sectors will face significant challenges in the next 10 or 20 years. In the face of this future trend, industries where the labor force is already declining are simply not favorable. So you'll notice that many chain businesses that still rely on chefs instead of modernizing, or many cold chain logistics companies that don't depend on machinery and equipment but still rely heavily on manual labor, as well as many enterprises in warehousing and logistics that don't invest in data centers, WMS, or high-bay automated warehouses, those that don't pursue smart manufacturing, are very likely to be left behind in the next 5, or at most 10, years. They will all be eliminated by this wave of structural transformation, even if you are still profitable today. That's why you need to anticipate and seize the opportunity ahead of time. Planning ahead and preparing to face what's coming, that's what we call extreme thinking and bottom-line thinking. At the very least, to survive the massive changes brought about by these shifts in economic structure, we have to reform. There's no other way. This is what you, as an entrepreneur, must do. That's why I say that awareness brings opportunity. It's not enough to just know. Your actions must align with your knowledge. Now that you understand these changes, you have to act. You can't just wait until you've exhausted the demographic dividend. If you keep trying to squeeze out another 5 years and exhaust the dividends from your machinery and equipment, but don't pursue upgrades or iterations, don't go digital, don't build a data middle platform, and don't move toward destaffing, standardization, and modernization, you're setting yourself up to lose. Upgrading early is the smart move. It's like playing cards. If you don't draw good cards, if you don't have a trump card, you won't be able to hold the line. If you have to shut down, it's because you couldn't manage the situation, a major accident scene. China's industries are facing structural changes. Honestly, I think Chinese entrepreneurs really have it tough.